All right, good morning and Happy New Year, everybody. Welcome back into the first long-form installment on Mining Stock Daily with the long-form episode this week featuring the host of the Jay Martin Show and the Vancouver Resource Investment Conference, one and only Mr. Jay Martin. This is the first time we've had Jay on the podcast, and there was a lot to cover because a lot of kind of headlines regarding relationships and politics between the U.S. and Canada this week, and what should we take from all the headlines, and is it nonsense? Is there actually trajectory of where these things are heading? There's a lot of change ahead of us in politics, obviously on both sides of the border, and so we tackle this conversation with Jay quite thoroughly. We talk about commodities, and then I also want to go back and talk about really the ethos of the Vancouver Resource Investment Conference as well, where it started, how it's changed over the years, and where it's heading. And obviously, it always seems like a great way to kick off New Year's when we all head to Vancouver for not only VRIC, but a number of other conferences happening around the same time. So I look forward to that. I want to send a special thank you to Arizona Sonoran Copper, Visa Silver, and Caliber Mining for the continued support of the podcast and able to do this episode and all the others throughout the week. There was a lot of corporate updates and some market analysis. If you wouldn't mind, if you missed any of those, you can go back to the Clear Commodity Network, clearcommodity.net, and find a list of all of Mining Stock Daily's episodes throughout the week, along with the other podcasts and YouTube channels that publish throughout the week as well. All right, let's jump into my conversation with Jay. Have a wonderful weekend, everybody. Be well. Well, Mr. Jay Martin, I have to admit, I'm a little bit embarrassed to say this is your first time on Mining Stock Daily, but thanks for doing this. Welcome into the show.
Hey, it's good to be here, Trevor. Good to see you, man.
Yeah, how was the holidays? How was Christmas? I know you got a big event coming up, so I'm sure it was all hands on deck.
Yeah, it always is, man. We had a great Christmas. I got 3 little boys, and they're like prime Christmas magic age, so we go all in on that, But the team is like around the clock until we check out for Christmas. But we have an event in January. But to be honest, Trevor, like if most of 99% of that event isn't buttoned up before Christmas holidays, like we're in trouble. So it's really a November, December project. There's always last minute things we're working on now. But Christmas was awesome. It was rainy up in Squamish. Yeah, no snow.
Oh, it actually rained in Denver all Christmas Day. It was weird, very, very odd. But now we got snow and cold. We're going to talk about the Vancouver Resource Investment Conference in due course. And I know things in preparation sometimes get held up when you're waiting for information from speakers and workshop hosts such as myself. So I do apologize for that. Thanks for the team for your patience and letting me figure things out. I will be doing a couple of workshops and presentations there in a couple weeks. But Jay, I think it's really listen, this last week in politics, specifically Canadian-U.S. relations, has just I tweeted out yesterday and I said, I just feel like there's more important things that could be done than talking about Canada being a 51st state. I do think that the Trudeau announcement obviously is incredibly significant. I know it may be long overdue. A lot of people feel that way. I'm not a Canadian citizen, although I feel like it's a second home to me, given how much work and relationships I have up there. But give me a sense of kind of where you sit and the conversations you have, and maybe even your own personal kind of insight here about really what happened in the last couple weeks leading up to this point with Prime Minister Justin Trudeau.
Yeah, the easiest way to understand this, and I think it's actually premature to celebrate Trudeau's resignation as really having any impact because the rest of the party is still there. They're still running the country. They're now going to select a new leader. The best way to understand this, Trevor, is just reflect on the recent U.S. election. What we saw was Biden and Trump debate. The Democratic Party felt very confident Biden had no chance of winning. And so they did the hot swap. They did the rebranding campaign on Harris, and they ran her instead. Now, obviously, that didn't work, but I think it would be fair to say that she did put up more of a threat to Trump than Biden would have. At least that was their strategy, right? That's exactly what's occurred up here. The Liberal Party is looking at the poll numbers, looking at the public approval numbers. About like 17% of Canadians approve of Trudeau. And so they're like, look, he's not going to beat anybody in the next election. We got to run somebody else. And so ministers started resigning. Obviously, the big headline was the deputy prime minister, Chrystia Freeland, which is like we don't have a vice prime minister. That's sort of what we have instead, you know. So it's sort of like the VP resigning. And then a handful of ministers in addition to that. And Trudeau is therefore sort of forced out. What they'll do now is they'll nominate somebody else. And it might be Chrystia Freeland, the former deputy prime minister. It might be Mark Carney. Those are the two frontrunners right now. So I think this actually strengthens the Liberal Party. I think it presents a bigger threat to the Conservative Party and the leader, Pierre Poilievre, than Trudeau would have. And so that's why I say it's premature to celebrate this as some kind of a win for the Conservative Party, because it's actually a bigger challenge. And if you look at the two frontrunners, like a couple things you should know. I think Chrystia Freeland, although she has a decent approval rating, it'll be very easy to say, you've been in power for years and look what's occurred. So we don't want you back. In the case of Mark Carney, he was the governor of the Bank of Canada from 2008 to 2013, and then the governor of the Bank of England from 2013 till, I don't know, maybe 2017. So he will be able to come to the podium and say, look, I stick-handled the 2008 great financial crisis, and Canada came through with a healthier balance sheet than any other G7 nation. And that last point's true. Now, I would argue the reason we came through was because of what we did in 2005, 6, and 7, not what he did when he came to power in 2008. I think we had already strengthened our balance sheet, reduced debt, leveraged our natural resource economy, and that's why we skated through. We didn't really have a crisis in 2008. Your American listeners might not know that, but that's why our real estate's so overvalued, because we didn't have the reset in 2008 like you guys did. So that's where it stands, and they'll pick a new leader. They'll put one forward, run the competitive process that is an election. I'm very optimistic. The Canadians in general are very hungry for change. We've had a decade of absolute destruction, and love to run into that with you if you want to. But that's my primary thoughts.
Yeah, maybe we do talk about that in due time, but I do want to go back and just maybe fill the knowledge gap of what happened in 2005 and 2007 that helped mitigate, the contagion affecting Canada with the great financial crisis in 2008.
Yeah, we had a very fiscally responsible prime minister, being Prime Minister Stephen Harper. And Canada has a great track record when Albertans are running the country. And that's where Stephen Harper was from. Coincidentally, that's where Pierre Poilievre is from as well. He's an Albertan. And built in such a way, they just have a better understanding of the importance of Canada's energy sector. Stephen Harper recognized that fact. He also recognized the broader value of our extraction industry. Now, I totally understand the opposition to having extraction industries in your backyard. Nobody wants a mine in their backyard. I completely get that. But, if you're good, we need mines, we need supply. I don't have to tell your audience that. And Canada has some of the highest safety, environmental, and social governance when it comes to mines in the world. So it's actually the ideal location for this industry. But more importantly, Canada's a small population, right? Same population as California, but a landmass bigger than the whole country of the United States. Yet we're in the top 5 global producers of oil, of gas, of uranium, of nickel, of zinc, of lithium, gold, diamonds. We have strengths. We need to play to those. Prime Minister Harper recognized that and played to those strengths, right? And we had a very robust extraction economy and export economy as a consequence. We also produce 25% of the world's potash, right? If you are a country that grows food, you need potash. It's a fertilizer. 30% of the world's softwood lumber. If you live in a house, you need softwood lumber. 60% of the world's canola. If you cook, look, we're a supplier economy. That's what Canada is. What we need in the federal seat is somebody who understands their job is to do nothing but clear the path for the provinces to conduct business and take product to market. But if you don't play to your strengths, you're destined to get crushed. And that's what we've done for the last decade, right? I mean, having a prime minister who denied the chancellor of Germany a natural gas deal when he showed up at our doorstep offering to pay distressed prices because they were under a tremendous amount of urgency, and shutting them down because he couldn't make a business case, yet saying, don't worry, we'll get you hydrogen power, which we don't have any, in the next 10 years or so. I mean, that's the equivalent of the coach walking into the locker room of the 1996 Chicago Bulls and saying, look, I know you got a lot of potential here, but we're going to be a soccer team now. We're going to play soccer. And the Bulls say, we're really good at basketball. That's what we do extraordinarily well. Yes, but soccer's huge in Europe, so we're going to play soccer now. And you repurpose the team that shouldn't be doing what they're doing. This is the massive failing of the Liberal Party over the last 10 years, is trying to make Canada into something we're not. Subsidizing the electric vehicle sector. We don't do that, right? That's not what we do. We do a couple things extraordinarily well, the best in the world. I mean, on a per capita basis, given the natural wealth of Canada, we should be, on a per capita basis, the wealthiest country in the world, if managed properly. But, poor management can mess up any team, and that's what we're seeing right now. Anyways, long story short, the previous administration was built towards the extraction industries and the natural resource export sectors, and that's how we came through so clean.
Thanks for that walkthrough. And I do agree with you that I think Trudeau stepping down, giving his party enough time to figure out the process and to find his replacement actually strengthens the Liberal Party in this situation. But yeah, I do wonder if just too much damage has already been done. No matter who goes in there, no matter what platform that individual runs on, if just the last 10 years under a Justin Trudeau administration has just gone on too far. And if there's enough independent voters in Canada to basically make that statement whenever that next election might be.
Yeah, it's a super valid concern, Trevor. Like what you just said, I think needs to be taken very seriously. And, for a handful of reasons, there's any number of metrics you can look at to sort of validate the health of Canada's economy. You could look at household debt, now higher than the U.S. as a percentage of income. You could look at housing affordability as a percentage of income, and all of this. The average home in Vancouver today, the mortgage payment exceeds the average salary. That tells you a little bit about who's buying homes. Nobody right now, right? It's the average home buyer age is in the late 50s right now in Canada. Same in the U.S. actually, but it is what it is. Canada has a lot of potential and the ingredients to be great, but what you just said is super important. And you could look at a country like Argentina to find out how that can occur. Most people look at Argentina and they think about a basket case country because the last 90 years have been that, right? And they're now maybe getting back to common sense practices, but the previous century was not. However, at the beginning of the 20th century, Argentina was one of the wealthiest countries in the world. And there was a term known globally as the wealthy Argentinian because of how abundant that country was. And that was largely fueled by aggressive European immigration and an agricultural commodity export economy. When it was leveraged, Argentina boomed. Now, they got smacked very hard in the Great Depression, and they didn't recover like other economies did. Instead, they went full populist and then socialist, and then spent 90 years bouncing between socialist and military rule. And they are just now getting their feet back under them, but I use that example because that is a country that had all the potential in the world, but still lost a century of productivity. It took them 90 years to correct course. And so it can happen. Elections matter. They really, really matter. And I think if we have any advantages that'll prevent us from going down that path, it would be that we border on the most powerful, wealthy, and influential country in the world. And you just had a very definitive election that I think is much bigger than who's going to be president. There was a cultural tipping point that we just watched unfold. And suddenly, and you're seeing this throughout the society, it's people are suddenly speaking differently. They're changing policies. There's like a sense of almost like relaxation, like it's okay now to just say what you think, Major platforms like Meta, I'm sure you saw this just yesterday, announcing they're scaling back all of their restrictive policies on speech. They're no longer going to penalize political posts because people want to see that, right? And so the ripple effect of that election is much bigger than just who's going to be, running foreign policy. It's cultural. It's a cultural tipping point. And that, I hope, is spilling into Canada. The same as we've got it here. Like you look at the 2021 Freedom Convoy, there's a large percent of this country that is very opposed to the Liberal policies, but has felt very muzzled in the last few years to talk about it. And as a content creator, man, I get it. I don't know how often you have videos demonetized, but I see it, and I think we're trending back towards a place of common sense now. I hope that's reflected in the election. But I love the question you asked just because a lot of Canadians think it's a foregone conclusion. We're going to switch administrations, vote the Conservatives in, and everything's going to get back to normal in Canada. And I hope that's the case. But it should not be taken for granted at all. At all. It's not a foregone conclusion for me.
I tweeted earlier this week that it seems like this potentially could be on the capital markets thesis. This could be an Argentinian moment. It was a great move to invest in Argentina when Milei was nominated, when he won the election. That's been a winning trade since day 100%. And I know it's still early days in Canada. Nothing has changed, but there is change on the horizon. And I am very bullish Canada. I'm more bullish Canada now, whether it's a Liberal somehow going to be able to fit into that PM role or not, or if it will be Pierre. Mm-hmm. But it does seem like there is going to be a moment, a Milei-esque moment, where people are starting to get very bullish Canada again because of its resource sector. And I honestly, I woke up the next morning. I was like, why is my phone blowing up? But it seems people agree, right? I mean, it's not now. It is not now, but it seems like the potential for that moment to come is in better standing now than it was, 2 weeks ago. 100%.
Yes. And that, that was reflected in the Canadian dollar, seeing a rally the day he resigned. Now, I don't put a lot of emphasis on short-term volatility like that, hardly at all, but it is an indicator of global sentiment, right? Like that. I think it would be hard to imagine a worse scenario than Trudeau. So yes, if we end up with another Liberal PM, but not him, that's still better. So I agree. It's a Milei moment for sure. But the impact of which is yet to be measured. I think we could go, 10% that direction, 100% that direction, but we're going to have to wait and see. But either way, yes, people should be more bullish today than they were a week ago on Canada, no doubt.
Yeah. It wouldn't take much to get the venture exchange back in a winning formation here. It's still really kind of stuck in the mud here. It's trying. It's I look at that TSX venture composite, daily, just kind of wondering when this breakout's going to happen. And I feel like it's kind of building to that moment, but we got to wait and see. There's a lot of macro events taking place that's going to have an effect on this, and we can talk about that as well. But before we get into economies, I've got to ask you, Jay, I've always thought Donald Trump was one of the greatest online trolls of all time, but he just has this way. But calling Canada the 51st state, that's kind of sting a little bit. I just kind of shake my head is this really necessary?
I love it, to be honest. Now, it would be a horrible idea for Canada. For the reasons the export economy, the natural wealth here relative to the population, annexing Canada would be terrible for Canada. The reason I love it is because it's putting pressure on Canadians and Canadian politicians to make some adjustments. I believe it was already a foregone conclusion that Trudeau was going to resign. But I don't think it was a coincidence that it occurred so closely after this trolling began. That was the added pressure, right? And that pressure has made change occur faster in Canada. So for that reason, and yeah, sure, a lot of Canadians are probably furious about it, right? And taking it very personal, right? I'm not. I'm like, look, what's the impact of it though? Oh, it's creating positive change? Perfect. Bring it on. Like, increase the volume. I want more of that, to be honest with you, because I don't think the idea in reality has any basis. It doesn't. And I don't think that Trump believes that either. And anybody who wants to understand Donald Trump a bit better, when he was elected the first time, I read his book, The Art of the Deal. It was published in the 80s. I wanted to understand this man. How does this man think? And his negotiation tactics haven't changed since then. In that book, he's like, you want to walk into the boardroom and say something crazy and throw everybody off balance, but you'll get their attention. And then when you slide in your real demand, it's so moderate relative to where you started that you get it, right? Now, isn't that his playbook? Like 101, we're going to annex Canada, right? We're going to take Greenland, right? We're going to take the Panama Canal, like all of this stuff. But what's he really want? Does he want to annex Canada? I mean, maybe, but what's his goal? It's to position America stronger in the upcoming trade negotiations with the new prime minister, right? It's to incentivize us to increase our military investment as a percent of our GDP. We're lacking in that regard. We're not protecting the union as we should, right? Same thing in Greenland. It's like, does he really want Greenland, or does he want the critical metals in Greenland? And more importantly, he doesn't want China to have access to them. Does he want the Panama Canal, or does he want reduced fees through the Panama Canal? And maybe Hong Kong to take their hands off of managing it. I mean, the deal was America released the canal to the Panamanians, and they then gifted it, in theory, to Hong Kong. That wasn't the deal that the Americans, that Jimmy Carter initially put forward, right? And so it's like, there's the headline, we're taking Canada through economic pressure that'll just, but what's the real intention? It's usually less than that. I mean, it's like any sales strategy. You start with the high ticket because you want to get them in at this price or whatever, right? So I believe that's the policy. I don't take offense to it at all. In fact, I love it. It's not only entertaining, but it's actually creating positive change.
It's wild, like through the headlines, because it's so ludicrous, and I can't help but like laugh and smile just because it's crazy.
Yes,
but like, and that's been my own fault, and I'm so glad I asked you this, because you just made me realize, like, I've neglected to actually understand the intricate game of chess Trump is playing, whether he knows it or not. I mean, but it seems like he absolutely does. Like, if you're reading that from The Art of the Deal, and his game plan hasn't changed, and that's, I guess that's what he's doing. Nobody should be surprised by this.
No,
it's wild.
Playbook. Yeah,
and it's funny. Like, I think I remember Peter Zion actually did a video clip of, like, what would a Canadian annexation look like? What would that? How would that entail? And basically, if I remember right, he said Alberta would go first because of the resource development straight into the U.S. It has incredible ties with its oil and gas sector, and actually said British Columbia would not be a far second, if not third, because it would have because of its proximity, it'd be kind of isolated out there, and it would go pretty quickly. I mean, obviously the one holdup would be Quebec, because it's Quebec and they don't even like any neighbor. So, so I mean, it all kind of like made sense, right? And like, here we are, and it's like, man, we're like, I'm not saying it's going to happen. Like, in fact, I generally hope it doesn't.
Right.
But
well, I mean, in theory, in practice, in history, greater centralization of any system usually ends up being its weak point. You don't want bigger things most of the time. More centralization and more complexity, right? We're stronger when we're smaller and able to pivot accordingly, right?
Mm-hmm. Right. All right. Okay. I'm glad we could talk about that. It's nice to, like, ruffle feathers from time to time, but actually get some clarity on it. I think you provided a lot of insight on that. Let's talk about resources in the macro here, and specifically on the back of gold. Gold's hanging in there really nice in this range, but really there is uncertainty within markets here, Jay, because of rising yields in U.S. bond market. A little bit of speculation of what Trump economic policies have in store. Will they or will they not be inflationary? Will the tariffs push CPI data ahead? And the bond market seems to be thinking it's going to be. And it has, markets are kind of volatile right now, but we haven't had a windfall event exactly to where, there's no fear in the street. It's still kind of that buy the dip mentality on those Mag 7 stocks here. But you just kind of wonder, like, is there going to be a move in the U.S. bond market that actually is going to put a firm, flag in the sand saying this risk-on attitude cannot continue to last? So wondering how you're kind of watching all this with the U.S. bond market and its relationship to other assets.
Yeah, I think the inflation battle is going to be an incredibly tough one. And I understand why President Trump ran on that mandate. He's going to be the inflation crusher and get the cost of living back to a reasonable place. It's a good thing to say, but his policies, let's look at tariffs. Again, I think a lot of the threats of tariffs are inflated, that same negotiation tactic, but let's take it at face value, or 75% of that. They're still inflationary because those costs get passed to consumers. So it's an inflationary policy. You look at the promise to deport a large percentage of the labor force, maybe for the right reasons. I don't know, but that's the cheap labor that's keeping costs down. You remove that, you're paying more. That's inflationary. You're looking at making America great again by reshoring industries. Again, probably the right move, but you're replacing cheap labor with expensive labor. That's inflationary, right? Notwithstanding that, $100 trillion in off-balance sheet liabilities. Everybody focuses on the U.S. balance sheet debt, but we've got $100 trillion in future promises to pay. That's what off-balance sheet liabilities are. So is there any path forward that doesn't include massive monetary expansion? I don't see it. The individuals who are promised Social Security in 10 years are going to get it at the nominal rate, right? But what's that money going to be worth? How are we going to make those payments? And so given that that's the impact of his core policies, and that's the reality of where we sit today, I don't see in a win over inflation. Now, if there was, right, it would be that he's going to get back to his drill baby drill campaign, and once in the seat is going to inspire more production in the U.S. and bring energy costs down. I've looked into that, and I think it's not a policy problem. He's going to run into a geology problem. If you look at the basins and where they stand from an output standpoint, the Marcellus Basin probably peaked in 2012, Eagle Ford 2012, and the last standing, and the Bakken, 2013, the Permian Basin maybe is the last sort of standout, but it likely peaked, it looks like 18, 24 months ago. Now, these shale gas basins, they ramp up super quick, and then they spend years kind of trickling down in production. So there's a long tail on those. But the nature of releasing that pressure, you get this surge and then slow seep for many years. But it's not what it used to be. And so I don't believe, based off the energy analysts that I follow, that that's going to be a possibility to really increase production to the extent that would bring energy costs down. And the only other potential deflationary force would be if we see some kind of a productivity boom on the heels of large-scale enterprise AI adoption that reduces prices again. And I think we're going to see that, spread over the next 10, 20 years, but that's not going to be a sort of catalyst event that's going to go and trigger big change, right? I use AI in my business. It's brought costs down. All the entrepreneur buddies I have do the same, but I don't think it's going to be nearly the impact that it would need to be. And so, yeah, I don't tend to sweat the gold price too much. I'm bullish on gold for those reasons, just because people are beginning to understand the necessity of protecting their purchasing power. What's interesting, Trevor, is last year at my conference in January. This is like a metals and mining investment conference. We're a niche thing. And last year, 30% of my attendees at that conference had never been to a show before. So we saw a 30% increase in brand new ears and eyes at that event. Now, if the mining and metal sector had been like rolling in cash the previous year and returns were coming easy, that would make sense. It's like the Bitcoin rally, everybody piles in when there's easy returns to be made. But that was the opposite last year. It was a terrible market. It was very hard to make money in the mining sector last year. So why did all these new people show up? And it's not just me. It's like the growth of my platform, your platform, like all of our peers, like people are showing up for some reason, and it's not for the easy returns. What I think is happening is that they're beginning to take a hard look at why their life is less affordable than ever. They have less trust than ever in institutions and establishments, and they're just beginning to pick their head up and say, what on earth is going on out there? And a percent of those people end up finding their attention in monetary policy and devaluing currency and the cause of inflation and therefore how to mitigate it. And those people are showing up. I mean, they're starting to look at hard assets. I think Bitcoin falls in the exact same category in terms of rationale for a lot of retail investors right now. But it's the hedge bet, right? And I think maybe gold's a bit overbought. I don't know. I don't think so, but traders will tell us the truth of that, because there's always two factors, right? There's the long-term trend, and then there's the short-term trading volatility. Traders overbuy, oversell, overbuy, oversell, and you got to know your time horizon to decide if that is something you should sweat or not.
Yeah, and I'm glad you mentioned Bitcoin, because I'm convinced we haven't had clarity of exactly what Bitcoin is as far as an asset, because we've had risk on jubilees, forever in Bitcoin's entirety, right? We have yet to see Bitcoin, how it really performs in a very hard risk-off environment. So, I'm waiting to see what the Bitcoiners have to say when that happens. And I'm not, and maybe it is. I mean, maybe it will be a risk-off asset, but it seems like, since I've kind of been, had my ears to the Bitcoin crowd, there's always been a narrative to pinpoint what it is at that exact moment in time, right? And that it always fits. Bitcoin is whatever fits the narrative of the time. But when things are tough, we're going to see what digital currencies or these cryptocurrencies actually are. And I'm kind of waiting to get some clarity, because I think that will be a little bit more of a better aha moment for everybody, not just people who are swear by it, but by people who are been on the sidelines, kind of waiting for that moment.
Well, it is a new technology just by definition. 2008 was not that long ago, and any new technology takes a couple decades to really settle and figure out what it is, right? Mm-hmm. And so that's why it's still volatile. That's why we don't know, you and I, what is it? Is it a safe haven? Is it a future currency? Is it a unit of transaction? Like, what is this thing? The speculator in me, you watch 2012, 2016, 2020, it's like, I can recognize a cycle. So the speculator in me owns Bitcoin for that reason, because it's like, this is like, sometimes the market just hands you something and you take it, right? Right. But in terms of like being very clear on what that is for me, just for my mental health, I qualify that as a speculation, because it's volatile as heck, right? And I don't know what the end game is yet, right? But I can look at these 4-year cycles with remarkable consistency and say, if you're a speculator, like, why not, right?
Yeah.
Have a bit of skin in that race. Yeah.
Well, for those new faces at VRIC last year, obviously, if they were paying attention to gold and perhaps like bought at that moment, they were going to see about 27% returns on that physical gold investment. Gold absolutely knocked it out of the park in 2024, outperformed the S&P and the NASDAQ, actually, which was always nice to see. And they had great returns as well, if you were into those indices. It was one of those markets in 2024, Jay, where it wasn't necessary. The gold price outperformed, but it wasn't necessarily something that raised the tide for everybody in the mining sector. Obviously, producers, mid-tier developers, they started seeing big gains because of margin expansions, and we're starting to see those Q4 numbers get published here this week. And a lot of companies, just like hundreds of millions of dollars in revenue in quarters, so that's great to see as well. But it didn't necessarily have a big effect on the explorers. If you look back in 2024 and looking through the mining cycle from exploration to production, and the companies that and follow and work with closely, what was the deciding factor between the winners and the losers, given the high rising price in gold?
Yeah. Yeah. I think investors are still showing a lot of discernment right now. I mean, I hear this a lot, what's with the disparity between the gold price and the equity prices, and why are these two things not performing more similarly? Where's the leverage we used to get from the equities when gold runs and all this? And I'm going to be honest, I just think that's very short-term thinking. I think if we look at this gold run and the performance of the equities, I would take the lens off of gold and mining, and I would just look at any investment cycle, right? I have confidence that human nature and investor behavior hasn't changed. And in every investment trend, what we see is, the pillar idea or concept begin to catch attention, investors pile in, bid the price up, and that takes off. And then investors look for the what's next opportunities, right? And, we just talked about Bitcoin. We've seen this countless times, 4 times in the Bitcoin cycle, when Bitcoin runs and then all the little altcoins start getting priced up as investors look for the what's next opportunity. We've seen this recently in the AI market. A couple of years ago, we saw this in the plant-based food market. Beyond Meat went public, and all of a sudden, there's a new asset class of plant-based food companies, right? Like the pillar idea takes off, and then investors feel like the upside's been captured. What's next? And they look for what's next. And that is how every mining cycle has occurred as well, gold included. The gold price takes off, and then over time, investors start piling into the producers and the developers, like you said, but they start with quality first, usually because it's the more sophisticated or better research money that jumps in first. And so they're looking at balance sheets, they're looking at management track records. And so I think it's quality which dictates who moves first. And eventually, honestly, for better or for worse, a rising tide usually lifts all ships, the good, the bad, and the ugly. And that's why bubbles form and then crash, right? That's the general cycle. But you mentioned Q4 numbers coming out. That's very important because you and I can look at the gold market and say there's opportunity here, right? And maybe make some bets, put some cash on the table, and speak with our wallets. But institutions don't. They're going to wait. They were waiting for Q2. They were waiting for Q3. They need validation in the balance sheet before they'll start investing their clients' money, right? And so the earnings reports are what will inspire the managed money to enter the sector with the big companies in a bigger way. That will inflate their share prices eventually more than they are today. And then investors will begin to look at what's next. More institutions come join the party. They look for the next upside potential. Smaller institutions are comfortable betting on smaller companies. And eventually you see the whole pyramid take off again. Timing that's impossible. I can't time that. Do I wish I could? Yeah, obviously, that'd be great. But, we can look at history. And I think I put way more emphasis on historic data than any prediction or forecast that I hear. And I just have confidence that investor behavior and human nature hasn't changed. So this cycle will play out the same way. It's just a matter of time. That's how I feel.
Hey, you've ran the Vancouver Resource Investment Conference for a number of years, a couple cycles. What do you notice about the conference itself and where you're at within the resource commodity cycle and how it pertains to Canadian equities?
Okay, so in the last couple of years, the big change that I've noticed, Trevor, is that investors, I think intelligently, are far more interested and curious about the geopolitical implications of commodity prices. Okay. And they're far more interested about the macro implications on mining stocks, meaning that if I remember the audiences that used to come out 15 years ago, they wanted a newsletter writer to get to the podium and tell them what stock to buy. That was really the whole concept, right? And there seems to be maybe this is the consequence of 14 years of tough markets where the opportunists aren't in attendance in as large of a number. And so those that are attending are just generally more curious and thoughtful, but they're looking for more of a story behind the thesis. It's not, this exploration stock's gonna boom, so buy it. Those sessions always do well, of course. People love stock tips. But in general, there's a broader curiosity. And so we've had to adjust to that. We never covered geopolitics 8 years ago, which wasn't even 7 years ago. It wasn't a thought, But this year, it's a core pillar. We're opening up the show with the global geopolitical outlook. Individuals like Colonel Douglas Macgregor and Dr. Pippa Malmgren Dr. Pascal Lota, some of the world's best geopolitical analysts, just to help decipher all of the noise and say, look, we're watching these conflicts proliferate around the world. There's a variety of stakeholders in all of them. What is their true incentive? And that's what these individuals do really well, with the intention of helping us understand how that's going to impact trade relationships, which is what it all comes down to, right? Is who's going to share the stuff they have. That's the raw materials sector. And if it's shared in abundance, the price goes down. If it's more restricted, the price goes up. And it's of my opinion that we've departed the era that I grew up in, which is globalization, increased sharing of goods and services for whoever had the cash or credit, to an era of just more specific trade agreements, who we're going to include and who we're going to exclude, right? Hence, someone like President Trump making a lot of noise about Greenland. He wants what they have, and he doesn't want Russia or China to have it, right? He's not only interested in gaining access, he's interested in restricting access from other individuals, right? And we're seeing that like at a very large scale between all the major superpowers. So understanding the new alliances being formed, the new adversaries being made, actually does impact commodity prices today more than ever. And so we cover that in a big way. And that's super fun. I love that stuff.
I'm glad you mentioned that, because actually one of the things I'm going to be searching for in my time in Vancouver is really the implications of basically resource export wars between the East and the West. And when it comes to critical minerals, it seems to me, and I kind of want some clarification on things like germanium, gallium, these rare earths used in electrification, but also, battery technology and all these things. It's just my understanding that there's been a brain drain on the processing. We're able to extract it because they're byproducts galore. The economics of it is still kind of up in the air. The processing of it is still up in the air if you exclude China from the equation of how we resource that here in the West. So that is a real theme. Like, I am bound and determined to try to digest when given the opportunity at VRIC and throughout the year, actually, because I just think it's really important. We can talk about gold production, we can talk about gold price, we can talk about silver and copper, obviously very important things, but it's this niche of critical minerals. I think it's still there's cracks in the system in the West that we need to figure out how to fulfill.
I agree, and I don't think those are easy fixes. How do you fix an offshore processing necessity, right? Yeah. Onshoring that is a big deal, but you're right on the money. And it's not a critical metal, but well, you could argue that, I guess. But look at Indonesia and their nickel exports, right? When they banned raw nickel, this is the world's largest nickel exporter, and they banned the export of raw nickel a few years ago because they're going to process in country and then export the refined product. And that's, I think, just a sign of the times. Indonesia realized that now is the time to play their cards, right? Like, we now have this refracturing of the geopolitical chessboard. We're holding a very powerful card right here. Let's play it. Let's leverage our strength, right? And so owning the whole supply chain, like, absolutely the right move. And I think we'll see a bit more of that. But how we balance that relationship with China, I mean, that may be the barrier that keeps us out of an all-out conflict. I mean, maybe, right? Is our reliance on each other for certain things that keeps us away from actual conflict. Could be a good thing.
And I think people forget that, listen, we're not the only, between this relationship between the West and China, obviously we import a lot of their stuff. We get it. But they also import a lot of our stuff, like agriculture, hogs, soybeans, like all the agricultural products. Like, there is a relationship there that I think a lot of people like us who kind of are fixated in the metals and mining markets, that we forget there's a whole nother resource sector in agriculture that has its own dynamics that play a part in that relationship as well, and it shouldn't be forgotten, right? Yeah, there is leverage there. There's leverage, and there's always leverage when you're the biggest customer, right? Like, you run a business, I run a business, you take care of your clients, right? Yep. If you have a client making important demands, you're going to listen to that, right? And make a judgment call on whether or not they're reasonable, but there's leverage in being the biggest customer. China can't survive without the U.S. buying their stuff, so they can threaten all these restrictions, but at the end of the day, that's their biggest client, right? Yeah. I want to ask you about VRIC itself and just a little bit of history about it. 'Cause it always seems like the conference really kicks off the new year. It's usually the first thing I go to and kicks off. I spend a few days in Vancouver in January where it's lovely and warm and dry and, pleasant weather. It's never any of those things, but the conferences are good. But it's important. It's important. It's like the first step into a new year. Give us a little bit of background about VRIC, how it's kind of evolved over the years, because it's been going on longer than obviously I've been in this business.
Yeah. Yeah. I mean, the core evolution of this show has been sort of this is going to sound, let me explain it, a maturation of our audience, right? But they've also become younger. So I'm aware those two things might not make sense. How has the audience gotten younger and matured? The investor psychology has matured big time, very much so in the last 5 years. And this is on the back of new investors coming to the sector and I think just doing a bit more diligence than we used to do 10, 15 years ago in this business. It was when 15 years ago, I bought Cambridge House out from my old man who founded it in the mid-90s. And at that time, I was going to mining investment conferences all over the world, and I was always the youngest person there. And this continued for 5, 7, 8 years, and I never saw anybody my age or younger than me coming in. It was like the audience was just getting older, and nobody new was coming in. And I heard a lot of quite frankly, hokey ideas from industry participants we have to find a way to gamify, these events and make them fun for the next generation. And I always thought people come back when there's money to be made. That's what'll draw people back to any industry. You can't trick them into coming back for poor returns. That's a horrible idea. But we're just now beginning to realize the impact of what happens when you starve an industry, a necessary one, of capital for 12 years. Suddenly the prices start going up of that stuff, right? And that is now pulling people back in. But yeah, I mean, so that the biggest shifts, Trevor, would be I think that management teams have evolved in the right way. There's always bad actors in any industry, and in a high risk one like mining exploration, there's going to be a larger percentage. Having said that, the responsibility, the stewardship over shareholder capital is far better than it was in 2011, 2012. The G&A is far less egregious. Yes, there's still outliers, but generally speaking, a long, prolonged bear market toughens everybody up and smartens everybody up and tightens up all the ships because capital becomes less available to people who are just fooling around.
Nice.
And so I think it's smarter. I think it's more efficient. I think it's more responsible business. And that's reflected in the investor base as well, looking for more of the big story rather than just what's most likely to pop. And therefore, it's a more enjoyable industry than it was. I used to get so frustrated with all the peacocks that would run around this industry in 2012. It just drove me crazy. And the best thing that could have happened to us as a business is that it crashed real hard. I think the best thing that happened to this industry is that it crashed real hard for a good decade, right? And cleaned out all the noise, all the opportunists, all the freeloaders. And if you were grinding in this industry in 2015, you were there because you liked to work hard, right? There was nobody getting a free ride. We saw 79% of our clientele go bankrupt, defunct, or just quite frankly unable to afford us. 79% between 2011 and 2014. We crashed hard. We almost didn't survive, right? It was, and many of my competitors did not. We took new territories when the Hard Assets Conference in San Francisco fell and Euro money fell, and we capitalized on some of those opportunities. But it was the best thing possible for this business, to be honest, Trevor. And I love that I cut my teeth during those years, to be quite frank, because it's a lot easier to build your network in a tough market. If it's frothy and everyone's at the parties and it's hard to get in the rooms that you want to be in, but in a quiet bear market where everything's tough, I was able to escalate my network, and suddenly, Ross Beatty will take my phone call. He wouldn't take it in 2011, right? Because everybody was calling him, and then suddenly he will, right? And so it was that was helpful, very helpful in an obscure way.
The dates for VRIC this year, Sunday, January 19th and Monday, January 20th. Obviously, a great list of guests and speakers. As you mentioned earlier in the conversation, Jay, you able to bring Colonel Douglas McGregor. That's going to be fascinating. My friend Grant Williams, obviously, is always a treat to listen to, no matter what the topic is. Pippa Malmgren. The list goes on. And if I may selfishly plug my involvement as
Please.
well, I'm going to do a workshop on 4 private companies investors should be watching in 2025. I'm really excited about that one. I get to have a discussion with Ross Beatty, as you just mentioned. We're going to talk a little bit about the themes that interest me and see what Ross's ideas are with those. I also, you set me up with Jamie Keach. I'm going to dust off Jamie Keach and figure out where the hell he's been the last couple of years. So bring it back to the world and see what he's doing. He might have to shave or something to find a nice shirt. But I'm really excited about it. Thanks for asking me to be involved. Thanks for this conversation. We've covered a lot of ground, from politics to mining and metals and where we're heading in 2025. I'm looking forward to seeing you in a couple of weeks, and I'll put a link to the registration in the show notes so people can inquire about that. Registration's free, I believe, ain't it?
Yeah, so first of all, I'm really glad that you're coming, Trevor. It's going to be awesome having you at the show, and I'm looking forward to your talk. I'm going to try to be there for your keynote. So the thing about this event is that I am 100% sponsorship supported. We have amazing partners in this industry, and as a consequence, we provide general admission completely cost-free. You do have to register. You can't just show up. You will not get allowed in. But you pre-register at vricmedia.com, or just for fun, last week I bought goodbyejustin.com, so you can go to goodbyejustin.com and register for your ticket to the VRIC. And general admission gets you everything. So just you can get that. You walk in, you get all the trade show, 250 mining companies on the trade show floor, 5 stages around the perimeter, workshops, speaker halls. You get it all, right? But if you're a keener and you want to take the next step and you want to meet Trevor Hall, or you want to meet Ross Beatty or Grant Williams or Colonel Douglas McGregor, David Rosenberg, Danielle DiMartino Booth, Rick Rule, we're flying in about 85 keynote speakers, then pick up a VIP ticket, because that gets you front row seating in the speaker hall. It gets you hosted breakfasts and lunches each day, but it also gets you access to the most coveted event, which is the very exclusive keynote speakers cocktail party, which I host on Sunday night of the event, January 19th at D6 Lounge over at Park Casino. It's super fun, buffet style food, past drinks, cocktails, and all of our keynote speakers will be there. And they're there to hook up with and hang out with everybody, right? To get to know the super keeners, get to know their subscribers, get to know the individuals who are like really invested in this business. So pick up a VIP ticket if you want to come hang out at the keynote speakers cocktail party. It's always a favorite for sure.
No, I look forward to it. Jay, thanks so much for your time. Have a great weekend. I'll see you in about a week's worth of time.
Can't wait, man. Can't wait. Looking forward to it, Trevor. Appreciate you, brother.